For the owners of LinkedIn, yesterday's IPO couldn't have gone better. Shares of the social network priced at the highest end of the range. The company will start trading today with a market value of more than $4 billion. It's the kind of venture capital success we haven't seen since the dot-com days. Now, here to tell us what LinkedIn means for tech VCs is a tech VC, Hussein Kanji. He formerly worked for Jim Breyer at Excel Partners and recently topped the list of the 100 most influential technology investors in Europe. So, Hussein, this is what the VC world has been waiting for, right? What Silicon Valley has been pining for, a pure internet IPO, not some hybrid like Zipcar with some physical assets. Is this going to open the floodgates for dozens of internet IPOs to come?
Well, I don't know about dozens, but there are about 4 or 5 that I think everybody in the Valley has been waiting for. I mean, this is probably the first. I mean, the other ones are the ones that we all know as household names, Facebook, Groupon, and Zynga. I don't think there are a dozen lined up kind of behind, but this is certainly going to be indicative, I think, for the Valley to see what happens.
Now, we've been talking about the valuation for weeks, and LinkedIn raised the offering price, or at least the range heading into this IPO just days beforehand, and actually priced, as I was saying, at the top end of the range. What does that say to you? Is this all about investor enthusiasm for the first real professional social network, or at least Western social network that they could get their hands on? Or is that valuation merited on the basis of LinkedIn's business? From your perspective as a venture capitalist, you have to think about these things.
Yeah, we do. And so, I sat down last night just to do a quick bit of numbers. The global worldwide hiring market's about $85 billion, and what LinkedIn considers hiring solutions is a $27 billion market. Now, LinkedIn only does $240 million in revenue, so it captures really a very small percent, less than 1% of that market. And there's lots of room to believe that as a platform, it will continue to grow and capture more of that market. Now, the analysts are projecting that earnings can go as high as 25 to 30% on that business. And if you just kind of do a forward multiple in this business and just look a few years ahead, I think you can justify a pretty good valuation for this company. My back of the envelope calculation was about 7 to 8 billion. So
is the talk then, Hussein, of a tech bubble misplaced?
Well, I mean, I think there is a lot of enthusiasm for these shares, and there's a lot of enthusiasm for a lot of things that are going on in the tech industry in general. But I think the good news for us is the fundamentals of these businesses are actually quite solid. I mean, you already see that in the LinkedIn numbers. It's a company that's been cash flow positive for the last couple of years, and I think that's going as it continues to mature as a platform, I think that's going to continue to become a stronger and stronger business.
But the venture capital business venture capitalists do not want to repeat what happened in 1999, 1998, 1999, and 2000. You don't want to create these expectations that all these companies are going to grow into their valuations and then suddenly find out that they don't and have another decade-long period, out in the hinterlands before you can come back to the public markets.
Yeah, I think everybody right now is kind of in the guarded optimism phase. I mean, I think these are fundamentally strong companies that are going out, but if they get mispriced or there is a bubble, I think all of us can have realized firsthand what the setback implies. So I think on the one hand, we're very positive, and we're cheerleading from the sidelines for these kinds of companies. But on the other hand, we're a little bit guarded as to we know what can happen if these things get too enthusiastic.
All right, Hussein, thanks for joining us this morning. Hussein Kanji is a venture capitalist, once worked for Jim Breyer at Excel Partners, talking to us about LinkedIn. The shares start trading today.